Good morning, everyone. This is Daily Trading Analysis with a quick market update for today, December the 14th. Today we open with the aftermath of yesterday's CPI data that gave up all the move during the day. So right now we had a big resistance at 12,050, and since the open we are slowly grinding up with more or less low volume and a couple of divergences. So basically we are waiting. We are not waiting playing sideways price action, but we are waiting with choppy, decent bullish price action. Still, as you can see in the 30-minute chart, we have very strong resistance level at 12,050 and another one at 12,150, 100 points above that. And after that, we have a big red candle and a big resistance structure since basically mid-November. So be careful because the setup is bearish after yesterday. Long term, but since the previous CPI on 10th of November, we are playing these levels. We are range bound sideways on the daily. And yesterday we got a big hit after better than expected CPI. We sold off. So watch out today because markets are not are always risky, but right now are especially risky because we are in waiting mode after yesterday big hit, and right now we can be hit more than ever if we try to be against the market. Right now, I don't have any bias, nor long nor short. I will just wait for FOMC interest rate hike decision and react to that price action. So right now, the only thing that I'm seeing is market is going up, it's still in the green, 0.50%, but we are rejecting yesterday's levels. So be careful with that. And one thing that we have in our favor is that dollar is selling off. Dollar is finding weakness along this channel, this descending channel that we've been following since mid-November, since we are trying to break some levels on the Nasdaq and the S&Ps. And right now, dollar is 0.30% on the day, along with 2-year yield minus 1.30 on the day and the 10-year also in the red. We are finding that dollar and yields are seeing weakness, and also natural gas. The only thing that could be against us is that crude oil is finding some short-term strength. As you can see, we are bouncing off this 70 level. That is the price level at which US strategic petroleum reserves are being filled at $70. Biden announced that a couple of months ago. So obviously this is providing support to crude oil, and we are seeing some kind of bounce of that level. That coupled with the fact that yesterday's CPI was not impressive, the initial reaction was very bullish, but I didn't buy this. I think it was an overreaction. And if you read the CPI report carefully and go on the details, you might see that it's actually not good. We should be seeing less inflation, a decrease in inflation instead of slowly decrease of rate increase. That's what is worrying me a lot, and I have a lot of concerns about that report yesterday. Markets reacted the same way I did, and I'm basically waiting for that interest rate hike decision. That is I think markets are already pricing in 50 basis points. I think Feds are going to raise that. 75 will be a disaster, and 25 basis points, I think we are not ready yet. So 50, it's what I'm expecting, and Honestly, I will wait for the press conference to see what Jerome Powell has to say regarding yesterday's inflation rate report and also the terminal rates that we are seeing decrease for next year. So let's review those. This is April's next year. Let me show you the watermark. So J, this is futures for next year, April. We are still seeing red on the day and we are seeing 4.78 on April. U contract is in September. So we are at this support. We are seeing 4.70, so both since April 2023 until September 2023, we are seeing the same 4.7%. And from that, we go to December and we can see 4.35% on December. That's a cut since these two that is pricing in the markets on December next year. The first cut of the year and the first that's the actual Fed pivot. So until then, 2023 is going to be a very, very impactful year for wholesale economies, families. People have no idea what is coming. We are going to be at 4.7, almost 5% terminal interest rates, super high, almost 5%. We are going to be up there for the entire year, almost 12 months, for sure until September, until we can see an interest rate cut on December at the end of the year for most probably 50 basis points. So this is happening. Something like this was already announced by Jerome Powell, and I think was the cause of markets actually not buying yesterday's CPI report. So we will see. I think all the whole US markets are watching today's FOMC press conference. More than ever, this is the last press conference of the year after big CPI data, and more importantly, also to take into account is that this Fridays is third week Fridays options expirations. And if you don't know what it is, I think you can investigate that, but I'm going to explain why this is. If you are watching options, this is the week in which you basically check that information, because that's going to be super useful for you. So this is 14th. Let's talk about 16th. This is 16th. We have almost 6%, 6 million open interest for SPI with a max pain of 391. Right now, the markets are showing 4.404 on the SPI. That's the level that is currently trading, and that's in the middle of the range, right in this middle. So max pain is 391, and Wall Street don't want to pay these puts down here at 380, nor these calls are 420. So they will try to move the market. You can call it manipulate, induce. They will try to establish a level in which both puts and calls expire worthless. And this is this Friday, the same week in which we got CPI being rejected, and today's at 2 p.m. FOMC interest rate hike decision and press conference. So expect extreme manipulation, not only for today, but until the end of the week, because this is what Wall Street does better. Just move the markets in their own benefit. So watch out for that. 400 would be a nice job for them to be in the middle of these huge walls of puts and calls. So be careful, because I don't think we are moving higher for 420. Neither go to the 380 for the puts. So let's go back to the charts, and let's go back to the Nasdaq chart, still chopping around, waiting for that. So from my side, I won't be trading today. I will just watch until the press conference, and then I might take some positions depending on the rate hike and also what is said. But honestly, today is not worth, because apart from CPI and the impact of the interest rate hike decision, we also have quadruple witching on Friday. So be careful, because a lot of open interest are in the market. A lot of manipulation and inducements might be happening. And if you're not prepared to assume and to manage that risk, it is better for you to wait for better opportunities next week, once the sun settles and everything is digested properly. So I think that's all from my side. I will do a recap later at market close to analyze what was said during the press conference and to provide you with details regarding so important information that you might be missing, or I will try to explain if everything complex is happening, and also to provide my point of view about everything. So as always, thank you for your time. Thank you for trusting me on this channel. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications once I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time, and see you in a couple of hours with the market recap after the big event of FOMC. Remember, the trading day is not over yet. Manage your risk, wait for your opportunity, and react to the price action. Discipline and risk management are key for success. Stay safe, everyone.